Hey guys, welcome to the Passive Investing Made Simple show. I'm your host, Whitney Elkins-Hutten, Director of Investor Education here at PassiveInvesting.com. This is the show we record live every Tuesday to help you learn the ins and outs of passive investing. We welcome you to bring your questions because maybe you're just starting off passive investing and you're trying to figure out how does this whole thing work. Maybe you've invested in a deal before and you're just like, whoops, I did a ready, fire, aim. I need to revisit my plan. Or maybe you're a seasoned investor and want to look at, figure out how to level up your portfolio. If that's you, you're in the right place. Now, you can check us out in previous episodes at passiveinvestingwithwhitney.com. You can also find a link to schedule time there with me if you'd like to discuss your passive investing goals and how we can help you meet those goals here at passiveinvesting.com. Now, today I'm super excited to be joined with one of our managing partners, Danny Randazzo. Danny, welcome to the show.
Hey, Whitney. I am excited to be here. I'm watching the Zoom here, and we might need to launch to get people out of the waiting room.
I didn't hit start webinar.
That's all
Okay.
right.
Okay. It has been a day. All right.
All good.
Hey, but now I don't have to re-record that. We can just tell Melissa to drop it off.
That's right. Chop this middle section here, Melissa. Let's get started and just jump
Okay.
right into it.
Yeah. Okay. Hey guys, Whitney here. Welcome to the Passive Investing Made Simple show. I'm your host, Whitney Elkins-Hutten. And today we're joined by one of our managing partners, Danny Randazzo. Danny, welcome to the show.
Hey, Whitney. Great to be here.
Awesome, guys. Well, thank you so much for joining us today. Today, we record the Passive Investing Made Simple show live every Tuesday to help you learn the ins and outs of passive investing. And I brought Danny on the show today because I wanted to, help people understand where does this mindset, where does the journey actually begin for somebody working a W-2 job, a high income earner, or even you own your own business. For you, what's the spark? What happens when you decide, hey, I want to take my financial future into my own hands? And, what's that mindset shift? How does the journey actually begin? How do we start answering some of the basic questions that are going to be so pivotal to how we actually scale our portfolio? So, Danny, before we do that, before we dive into your journey, just tell, people if they, haven't heard about passive investing before, if they're new here, who you are, what you do, and how, just really briefly, because we're going to get into your journey, how you got into the space.
Perfect. Let me try to get started. PassiveInvesting.com. We are essentially a private equity company with multiple verticals at this point. We started out in kind of commercial real estate, multifamily world, um, grew into a self-storage vertical. We have an express car wash vertical. We have our hospitality vertical. We own one hotel, and we have a handful of lending businesses. We have a hard money lending company. We have a long-term lending business and an equipment financing business and a couple other things in between there. And I think it pairs really well with what we're talking about today about uh, income and how to manage your own personal portfolio. All of my true assets are just tied up in what we've kind of built and created. And so I care about every single one of them greatly, and want to try to make the best decisions for my family, as well as any investors that might be in each of these different verticals right alongside us. And so my journey from talking specifically about kind of managing your money got started. I think the light bulb moment for me was at some point in high school, and I was always, interested in tracking with a journal. I remember even with the last few pages in a checkbook, you had your debits and your credits column, and you had to balance it yourself because you couldn't log in any time and check your balance there. And so I would keep that by pen and paper, and then kind of got into just a very simple Excel spreadsheet in terms of income and expenses. And growing up where I did in Michigan, I would work really hard in the summer to mow lawns, move sand, clean up beaches, do different things, and earn money. In the winter, I would shovel driveways, I would paint houses, do some work inside places, and I did that to save up to buy some of those fun things that my parents wouldn't just give to me, and earning it was always better. I remember I had saved up a bunch of money. I think it was like $700-800 at the time. To I wanted to buy a portable DVD player from the Sharper Image at the mall. And I finally got to the store and I had my money, and I was like, man, I worked so hard for this $800. And I was like, do I really need this portable DVD player for $800 in, I don't know, early 2000s? And I didn't buy it. And that was just a pivotal moment that I remember, of that kind of light bulb switch. And for me, that kind of set the precedence of tracking income and tracking expenses. And at the end of each month, trying to have more money saved than, a negative overspend. And that kind of basic, I mean, really, really basic. We're talking like a few $100 here or there. But that basic tracking just created a habit for me, where I would track it and I was just interested in it. And I would read books about investing. I would research different companies. Kind of the only thing available to me back then was the stock market. I remember when Scottrade first came out, I think I sent $500 in to start investing. On my Scottrade stock account. And so that really basic, fundamental learning is really what sparked the interest. And I think we are constant learners. Markets change, cycles change, politics change, world economies change, technology changes, manufacturing changes, um, industry innovation. Um, you got to stay knowledgeable, and being a constant learner is, I think, by far the most important um, tool to being of a financially sound mind. You're going to make mistakes along the way. Not everything's going to go perfectly, but continuing to learn is really important.
Well, I want to start connecting certain parts of your journey, connecting the dots for the investors. So it sounds like you've always had this natural affinity to track your income and expenses, make sure that you're staying in the black rather than operating from the red. I'm sure a lot of people here that are listening to this can identify with that, especially as being a high income earner or a business owner. But I want to kind of double tap on that point in your journey. You're in your career, you're doing really well. So you've been investing in the stock market. At what point in time, first of all, when you're investing in the stock market, what did your financial plan look like there? And that most people are told that that's a smart move to invest in the smart stock market. What had you start questioning that if this was the right opportunity for you to achieve financial independence and financial freedom?
Yeah, I think as I was going through my consulting career, being a W-2 income earner, kind of researching the stock market, I just kind of naturally gravitated towards the Warren Buffett, Benjamin Graham philosophy. I think the Benjamin Graham book was The Intelligent investor. Um, and I think I had written out like 5 to 6, maybe 7 like stock criterias. Um, uh, Affordable price to earnings ratio was something that kind of shaped that vision. And when I first got started, kind of number one, I had to save money in order to invest and make a meaningful investment. So once I had, a few $1,000s put away and could kind of like grow that every month, that's when I started to just do the stock market thing. And the stock market thing to me, I was just looking for companies with affordable price to earnings ratio that had an opportunity to grow. And I kind of just stuck to basic fundamentals. So for me in 2006, very early, wasn't even in my full career yet, but Apple was making waves. And so buying Apple stock was something of a decent decision. Um, Getting into that kind of working career, I just wanted something that was safe and would grow. And kind of just blindly did that and would invest in companies like GE, um, ExxonMobil, a couple of these other larger kind of blue chip companies, Fortune 500 companies. And I started to look at performance. I also compared that with my 401k, the consulting firm I was at, would match it. I just had the mindset, let me max this thing out, and put the most away to reduce my taxable income. And so I did that and um, looked really hard at what mutual funds I was investing in through that portfolio, and it never really did much um, through the many years. It kind of grew, kind of didn't. You were kind of more at the mercy of what the greater market did in general, than kind of blindly picking a handful of the significant outperformers. And um, that's kind of probably where the tipping point was for me. I kind of realized I was like, this is a little unpredictable um, for what I'm trying to achieve. And it didn't immediately resonate, but I think once I figured out what my actual financial goal was, and this is probably the second most important fundamental. So step one is know your income, know your expenses, know um, what you're saving. Step two is figure out what your goal is. And that's when I really started to question that, you know, basic um, work in your W-2 job, put money in your 401k, peel off some savings, put it in the stock market. And I didn't really start questioning that until I really boiled down what my goal was. And um, coming up with that goal of, do I want to continue traveling 4 days a week, 40 weeks out of the year in a consulting job and not be around family and friends and at home? Um, that was something I didn't want to do. And so that shaped my vision of, well, what other job could I do to be home and around family? And that was kind of the light bulb moment of, I have these savings now, this kind of nest egg. It's in the stock market. I've got this other nest egg that I've kind of saved away. It didn't really grow much. Maybe it grew a little, um, but it was there. And so that kind of moment of, let me really think about what this phase of life looks like. And I heard a great podcast the other day talking about chapters of life. And it was just a remarkable story of a man who started a business, lost it all with COVID, but had an opportunity come up next. And he was just saying how beautiful the journey of life is with these chapters where something ends and something new begins. And I think about that in terms of the journey in your phases of life. And so for me, um, the phases of life are, kind of your working, maybe you have a young family, and then there's a next phase of, you're still in your working years, and maybe you have grown children, and then you probably transition more towards what retirement years look like. I think for me, as I think about, retirement many, many years down the road, I don't think I'll ever um, hang it up and stop learning. Um, so you're going to constantly have to check in on your financial goal, with what phase of life you're in, and what your goal is for the next phase that you're in and the phase that you want to prepare for. And so I think that helps kind of shape, um, probably risk tolerance, what reward or returns you're looking for. And that was a big moment of coming up with what that financial goal was, um, to really look at and say, okay, what I'm doing is not working to meet the goal that I desire.
And what was that goal? Was it cash flow? Were you missing cash flow, equity growth, tax benefits? Were you missing
Yeah,
capital preservation? Like what was,
yeah. Ultimately, I wanted to generate cash flow to quit that W-2 job so I could be home more.
and I think a lot of people here can identify with that. I mean, I know for me personally, we were just talking before the show. I mean, my daughter, had a sporting accident, and, we were talking about how the cash flow, she's like, Mom, I'm so sorry that we're gonna have medical bills. I'm like, honey, we got cash flow. We got cash flow coming in, and we're good. Like, but so many people don't are not afforded that flexibility. And so the cash flow is so certainly very important for bringing you out of your W-2 job or giving extra
Yeah.
flexibility.
Or even just augmenting it. I know I had a lot of friends that work in some of the government space or even in the consulting world. And with the new um, direction of the White House, some of their jobs were literally like on the chopping block, or they're living kind of a 2 week pay period at a time. And there's a very nice feeling to not having to rely on another outside party that can change their mind of what they're going to do, um, to help at least support your cost of living.
Mhm. Okay, so you're at the point in your journey, you're like, "Ooh, okay, I'm investing in the stock market, but what I really want is cash flow in order to have optionality." Um, you know, and I think this is where a lot of people, especially business owners that I talk to, they get hung up and they're like, "I would never quit my job. Like, why would I do that? This is my passion." It's not about quitting, it's about giving yourself optionality. So, Danny, I'm curious, what were some of those next questions that you asked yourself in order to come up with a plan? Or were you even jumping to a plan as the next step?
You know, I don't think it was a plan. I first came up with the goal, and then I started to kind of research, like, what could I do to meet this goal? Because there's a variety of things. I always boil it down like, you could bake cookies and sell them on your street. That's an option. You could do that. You could start a business. You could partner with somebody. You could flip a house. You could um, start an online podcast. You could start an educational service. There's so many different avenues out there. And so I just started to piece together, okay, what can I do? What skill sets do I have that could meet this goal?
Mhm. Okay, and what did you identify? What were some of the as you looked at all the menu of optionality that you had in front of you, how did you start narrowing down, like, what was gonna be a good fit for you? And what was that?
Yeah, real estate kind of came to mind first. I had used my kind of nest egg that I had saved up, bought a house, and started to rent a bedroom in it. I was still consulting, still traveling a lot, and that kind of light bulb moment of like, oh, I can have an asset that a renter can pay the bills for, build some equity with, and have the opportunity for that to appreciate. And so real estate um, was an area where, from an investment perspective, if you can save up some capital and you can deploy it, buy some property, that can present an opportunity for you to get some cash flow and have it make a return. And so that was an avenue um, to kind of go down. And, at the beginning, you heard kind of all the different verticals that we're in now. So getting started was important, but then diversifying um, also became important as I thought about kind of my financial goals of having uh, kind of different industries to some extent where you're just a little bit diversified. Um, I think the the old saying of not having all your eggs in one basket, you probably don't need 1,000 baskets, but having a few um is what works for me. And everybody's different. You don't need to have a few if you know what works and what allows you to sleep well at night. That's kind of the joy of the financial journey. Everybody has a different financial goal. And so you'll have different investments that meet your goals or different strategies um, and just a different profile that lets you sleep well at night.
Now, this is where kind of feel there's another sticking point whenever I'm talking to investors, especially business owners, or people that are working in the C-suite of the companies, um, is that they're like, "That's fantastic, Danny. I would love to be able to do that, but I don't have the time. I'm running a business, growing a business, and when I'm not doing that, I've got my life. Maybe I'm, married, have a family." So I rely on my financial advisor for that. They're taking care of me. What kind of opportunity cost is hidden in this type of mindset?
Yeah, I think there's always a a sound decision in having an advisor in your corner. They certainly cost money. It's kind of like a business coach. And I always equate that to, professional athletes. I play a little bit of golf. The best golfers in the world have a bunch of different coaches, and there's a reason that they're the best in the world is because they have a team around them. So having a team is important. And, I think what I had previously mentioned just around like the diversification of things, having having someone support a portion is important. Having assets and allocations and other buckets is really important. And again, I think each individual person should be really in charge and responsible and thinking about what their personal goal is and where those buckets fit in. And so you might have a great relationship with an advisor, and maybe they are super knowledgeable of the hottest tech stocks in the world. I wouldn't probably put 90% of my net worth or available investment dollars into that bucket, but maybe you can put a small portion in that bucket. Um, the other really important thing is from a cost of living perspective. I think it's always really, really important um, to sleep well at night. How much do you have saved up in liquid cash or cash equivalent where, it's not going to earn the same as a crazy tech investment or a Bitcoin investment, but it's there to get you through some of those hard periods of time. I think that's just a really important decision. So having a good allocation of your assets is important. If you don't know really what that means, I think taking the time to research it and really think through, okay, I'm this age, I am going to be working this job or running this business for kind of this period of time. These are what my financial needs are. How do I make sure those are covered? And then what else can I invest with? And, it's not a one size fits all, but um, I think having a pretty basic approach where you can take care of your needs and then invest in some other buckets, and look at alternatives is an important thing for each person to do. So for the person who says, "Hey, I run a big company, I don't have the time to do that." I think you can find the time, and it doesn't take long. You do it on the weekend, spend some time thinking through what your needs are and what your goals are, and then you can always work with a team to help you set that up or make that vision a reality.
Mhm. I love the fact that you kind of called them different buckets. For longtime listeners of the Passive Investing Made Simple show, we talk about investment tiers, right? One, making sure that you have that liquidity tier, your emergency savings, uh, just the sleep well at night factor, as you called it. And then we talk about the cash flow tier, and we break those up into a couple different areas. And that's where really to kind of counterbalance our equity tiers. And then we talk about the other tier, and I call it's not better or worse than any of the other tiers, but the hedging tiers. And that's where like our momentum investments go into, like our Bitcoins, our gold, all that sort of stuff. So I really love how you're thinking in terms of buckets. Um, so, some questions that I have come up with in my, calls with business owners, they were like, I love why invest outside into other asset classes. If I want to like put the best dollar to work, I'm going to invest in myself and my business. Is there, how would you kind of, guide somebody around that type of thinking? Is it either or? Is it an and situation on how they, utilize that capital? Is there I'll stop there because I kind of have an opinion on that. So,
Yeah, you know, I think it's very different, each person to another, and especially with like the business owner. If there is a hot business industry right now, it might make the most sense to pour everything you got, heart and soul and financial resources into that thing and let it really take off and run. Does that come with a lot of risk if something disrupts that industry, changes it, or sales potentially dry up in that business? Absolutely. Could you sleep at night if you didn't have that? I think these are questions you got to really think through. And so more than likely, I think it's probably an and position where you can put a lot back into your business, and you can take some off the table and put it aside. And even if it's just taking some off the table, out of your business and allocating it to your savings bucket or your liquidity bucket first. I think people, and especially business owners, learned a lot through COVID, where, the world changed literally overnight. And even as we think about, real estate investors, we had a crazy run of interest rates in a pretty short kind of 6 month period of time where, the SOFR LIBOR index went up by 40 times and the 10-year treasury went up by 4 times, 4x, um, in a time period. And um, so I think those kind of random acts are going to always happen. And so you have to be prepared for that. And that's why I say kind of that liquidity bucket, that savings and reserve bucket, really important. And then, you know, I also equate your investing journey to a learning bucket in some capacity. If you're a high income earner, if you're a business owner, taking 25 grand or 50 or 100 and making an investment into something is a learning opportunity as well. And I think there's ways to try things out, try to invest, work with somebody, um, to learn and see if you like it. And if you don't, you can always move on and do something different.
Mm. Well, Danny, as we wrap up this portion of our show, I wanted to, have you reflect a little bit. What did you wish you had known 10 years ago, especially about, your early career that would have helped you in the long term where you're at today?
Mhm. I think if you could, what do I wish I had known 10 years earlier? Um, Probably just all of the knowledge that's been accumulated in the experiences. Um, I think learning through experience is really important. Um, and you never quite digest the lesson unless you go through that moment. So books and research, and studying can help, but you never fully grasp the lesson until it's been learned through experience. So if I could bottle up the last 10 years of experience and give it to myself, in the past, that would be really cool. But I think, for anybody who's out there considering, their financial journey, like now is the time to just get started and learn. And it's not too late. You don't need to know everything, but just take your time, learn what you can, and just be patient. I feel like people people get really excited or eager, and we just need to remember to be patient.
I love that. I love that. Um, okay. So I want to put a little pretty bow on this. What would you say is the first step somebody should take? Somebody who's listening to this and are like, all right, Danny, I am a little bit more curious about this journey. What is the first step they should take?
Step one is just boil down what your goal is. Figure out where you're at in your life, in your journey. What chapter of life are you in? And where do you want to get to? And that's going to shape the need that you have to fulfill. If you're in a journey where you're saying, "Hey, from a financial perspective, I am well off. I don't need to triple my income or have, um, ridiculous returns on investment," you might be in a great spot where you can kind of just shift everything over into a steady, low risk portfolio. And that'd be great. Or if you're like, hey, I'm kind of just getting started, I am not in the financial place I want to get to, and I need to really ramp things up. You might be in a really high income growth period where you need to go out and earn a lot of income. And at the same time, you might need to be really aggressive, or take on a little bit more risk to have higher returns. And so I think that's the first step is like, where are you today and where do you want to get to?
I love it. Well, Danny, thank you so much for sharing your knowledge and expertise with us here today. Guys, if you're here live, don't go anywhere. We're about to start the Ask Me Anything part of our show. I'm going to leave this going. All right. So guys, if you're here live and you have a question for Danny, jump on over to the Q&A box, drop your question in, and we'd love to take care of those for you. We probably have like about 10 minutes. So now let's see here. I would love to, Danny, since I have you here, all to myself. Not really. I'm sharing the stage with several other people that are in the room. What had you moving from that first rental property? Because you alluded to it, and I know a little bit more of your backstory, to actually pivoting into like adding in debt funds, right? Because most investors get hung up. They're like, I love equity. I love the feel and control of like real estate. I love getting in one investment the tax benefits, cash flow appreciation. I'm willing to take that risk. But I know we've been talking a lot about debt. Like, what had you making that shift?
The big moment was when COVID first really broke, and you had news outlets talking about rent moratoriums or like not having anybody pay rent, and you're like, whoa, I don't think that's allowed. We need to still pay our lender. And that that sort of light bulb moment came through a conversation with a great friend of mine, and the kind of business was born in the lender world. And when we started to talk about debt and actually being the lender, it made a lot of sense to have a diversified and almost like an opposite complement to commercial real estate. As a commercial real estate owner, you're trying to collect rent, pay your bills, and hopefully you have some money left at the end. Well, COVID kind of disrupted that. It was really unknown, a really challenging time. And from an owner perspective, we were like, shoot, we don't know if we're going to get paid. We better be very cautious here and got to see what happens. And then you look at the lender side of the business, and the lenders were still making their money, getting paid. Um, and so we said, oh, wow, this is a really good complement or opposite to the owner investor business, where if we can deploy money in a debt position as a lender, and we have borrowers paying us every single month, we just found a new steady stream of cash flow. And these borrowers, again, pay every month. Um, so that was kind of the switch that flipped, and it was mostly out of a need to find a alternate or a diversified option of, okay, we have this equity investment bucket. There's a lot of things we can't control with that. Um, and so can we have another kind of business vertical where we can have some steady cash, where uh, you have a little bit more control over it or less risk of unknown?
So you're talking, oh, there he is. I thought you left. I was like, all right, and we're done. Okay, so you're talking about that from the general partner perspective. Now, I'm curious though, how would somebody listening to this take that same type of philosophy and incorporate it in their portfolio? Now, I kind of know the cheat code here is because our you guys invest in everything alongside with the limited partner. So you guys are creating these investments for not only as the general partnership, but for yourself as a limited partner as well. But like, how does somebody who's listening to this go, okay, great, Danny, but I'm not going to start a lending business. How do I incorporate this?
Well, I think there are, equity investment options out there, and there's debt investments out there. And a really important lesson that investors need to kind of study and research and kind of think through. Again, everybody's different, but it's the risk profile of what you're investing in. Equity investments typically have more risk and a higher return on investment. Um, and when there's more risk and more reward, that's great. But you got to really remember that there is more risk and reward. And so having that balance of a portfolio where you could have your equity investments, you could have your debt investments that have a a lower risk and a slightly lower reward. It's all relative though, because if an equity investment isn't really performing, your debt investment may be a superior opportunity. And all of this changes as market cycles happen, as politics change, as everything goes with that. And the third kind of bucket would be like your cash bucket of you could you could put money out there in a bank today and earn 4-5% maybe. I know sometimes today those are more like promo rates for 6 months. Um, but really, really low risk, pretty darn good reward. And so if you have $1 million to invest at 4 or 5%, you know, that's that's not a bad year's work if it's sitting in a bank insured and not doing anything. And so I think that's where you kind of balance out the risk versus reward with those different buckets. And um, learning how risk and reward is different from an equity investment to a debt investment to a liquid investment to a stock investment. Really important for someone to review and kind of establish what they're comfortable with.
Mm-hmm. Mm-hmm. Well, Danny, thank you so much for spending time with us here today and sharing your journey and your knowledge with us. If people wanted to learn more, how could they do so?
Check us out at passiveinvesting.com.
Awesome. Well, Danny, again, thank you. We will catch up with you next time.
Thank you.